Good day, everyone. Ali is here from Safi Financial Network. Today is January 11th, 2023. Here is S&P daily chart. And as you know, market had a very nice day today. It's just the uptick. You see this candle without any upper shadow. However, this upper shadow concerns me a lot just because we are getting close to uh, uh, this trend line, and also we are getting close to this level, the one that I have, like a 4014, and we are just we are at right now, this is the future market 3968, which is kind of like a 50 points above the current level, and we are reaching to this bearish trend line that was working pretty nice on December 13th, and we had like a breakout, like a false breakout, and then coming down and sharp sell-off after that. However, we are not taking out this pivotal low here, so this is very important level still. Based on my calculation, I have this one 3686. That's gonna be the level that I have. Tomorrow we will have CPI number for the month of December, last month of 2022, and everyone just keep an eye on that one. So everyone is waiting for that number is coming out, but I just want to give you some interesting thing that I really work on this before as well. So this is the cycle for each top. As you see here, we have got this top here in January 4th. The second top would be here March 28th. And then the next bottom, which is pretty close to this one. So when you see this this cycle, this time period actually gives us a very nice, it's kind of like a 1 day or 2 day. Basically, I will give 3 to 5 days window. And as you see here, it works out pretty well. Even this sharp sell-off in Monday, September 12th, which is a CPI number. So I remember that day because I got short position here and I just went into money very nicely after that. And here is the Monday 12th, September 12th, 2022, and right now we are just after that, 5 months after that, we are getting 4 months, I believe. Yeah, 4 months after that, we are getting to January 12th, which is coming tomorrow as well. So if you just put 4 month cycle, we are getting close to the moment of truth tomorrow, and this is the top that is mentioning, and this is another probably bottom or top, so we don't know yet. If we break out to the upside, probably February 23, like at 18 February 23, that's going to be a pivotal point, and it's kind of like along with my cycle, like the advanced cycle sheet that I have, but this one gives me that we don't have any cycle for this time of period. But if you look at the other cycle, which is from this top, and this top, which is August top, we are getting close, or we are just passing that pivotal point. So tomorrow, I believe this cycle is going to prove to us if it was the pivotal point, which is a very minor one, or the other major one is coming and we are just hitting this trend line 4014 and then coming back down sharply, probably to this area, which I think still there is going to be the case. There is nothing change in our bigger scale as we are still into bear market. I know lots of people just are looking for excuse to have a really fairy bounce or something like that. But again, all in all, when you see the economy situation, when you see the interest rate, when you see the Powell speech or Powell tone or the other Fed chairman's tone, everyone is saying about higher rates due to higher inflation. As long as we are above 2%, Federal Reserve is not going to withdraw for its tone. And um, again, the same as the last 10 years, don't fight the Fed. Seems like everyone wants to fight the Fed this time, and they want to just enforce their idea to the Federal Reserve that it's enough. But At the end of the day, they are going to make a decision by their data. Actually, they don't care about the stock market right now. It's not 2020, it's not even 2021. We are at 2023 and they don't care about the stock market. They just care about the inflation, and inflation is very, very high, higher than their expectation. And if we are getting any number above 6.6%, 6.7%, then we should see market is going to collapse probably, just because everyone would be disappointed for the Federal Reserve tone, and everyone would be kind of like losing their faith. Okay, so again, we are just waiting for CPI number tomorrow. I keep an eye on that. It's coming early morning tomorrow, pre-market, and probably we will see a hike and then sharp sell-off after that. So it's not going to surprise me at all. I'm not looking, to be honest, a breakout, especially breakout above this pivotal high. I believe this pivotal high, which is December high, is going to be there for a while. And as long as we are in this bear trend line, don't look at the moving averages, just because moving averages, sometimes we are taking out all of them to the upside, and even we are breaking this trend line, but this is the major trend line that I see. And also these two highs, August high and December highs, are going to be very, very important. As long as we are below these two highs, probably market cannot move to the upside. And here is another trend line, another possibility that I want to talk about is this. So basically, if you are drawing a line between this line and this line and stretch it somehow to here, probably you will see a breakout to this level and then coming down. Still, we are below this pivotal high. Still, we are below this August high, but that's going to be false breakout, and everyone is just watching this major trend line, which is important actually. If you see another false breakout, that would be very, very nasty, to be honest. But again, just take consideration of this. Even if we are above this line, it doesn't guarantee that we are getting back to the bull market. Still, we are below this trend line, which is the minor one, which is the new one. And you know that the new trend line is going to be more dominant than the stronger one. Everyone is looking at this one, and probably lots of stop losses are here. So that's going to be a very, very interesting, huge liquidity pool here. So probably institution want to stretch market up to the upside to take out all that liquidity pools and then coming back down. I don't know. So we will see. We will see how it goes. Moving on to hourly chart. So here is the hourly chart. This is very, very stretched. This is stretched to the upside, and I believe still we are into this resistance area. There are lots of short-term supply area here. So there is another one, which is very, very important one, which we are getting close to that one, 4,000 to 4,012. It's coming along with our daily analysis, and also the last one, and the important one is here. So even below that, let me just show you here. There is another one which I don't show. Even if we are getting above all of this supply area, there is another one here just above this pivotal point, which is going to be this topping area. So look at that. So this is 4,064, 4,092, which again, I'm not sure even if we get there. So I'm kind of like looking for shorting opportunity tomorrow. If we are getting above 4,000 area, it depends. If we are getting a reversal in 10 minutes or even 1 hour chart, I'm gonna short, because the downside target would be very, very substantial and very, very sweet. All right. Okay, moving on to Nasdaq. So here is the Nasdaq daily chart. And as you see here, we are kind of getting into my shorting area, which I just indicated yesterday. And I just update my calculation. Probably we are getting a stretch to this level, to 11,545, which is pretty nice area for shorting the market. So I didn't get into short position yet. Probably I will do in London session, or even tomorrow around or before CPI number announcement time. Again, it depends on the market and it depends on the price action. I have to see the momentum. I have to see the pattern in hourly and 10 minutes chart. But right now, based on my analysis, we are very, very close to the opportunity for shorting the market. Even if you see this is the momentum index, stochastic momentum index, and we are getting to the overbought condition again. Within trend line, if we are getting to the overbought condition, this is a leading indicator for me to gives me a signal that we are getting ready for short. But price action needs to coming along with this, and if price action proof kind of a reversal in the smaller time frame, then we can see a reversal is coming probably in bigger time frame as well. All right, so moving on to the hourly chart. So hourly chart, as you see here, it's very, very overstretched. It is overbought, and we are getting close to let me zoom back here. So this is the pivotal point, and this is the breakout level, and we are getting back there. So all in all, everything, to be honest, is sliced and diced for another shorting opportunity. And I'm just waiting to see how price action is getting unfold, probably next 2-3 hours. Then probably I will send a signal again. So make sure, because of the CPI market would be very, very volatile. Even if you want to just take this short trade, be careful about the position sizing. Always position sizing is the key, because there is going to be market forever if you don't overload too much on yourself. You're going to be winner over the long run. All right, so just be careful on that. But anyway, I'm just be cautious and be alert about my signal. Moving on to the Dow Jones. So Dow Jones, again, the same thing. We are getting close to my area, which I told you, 3400, 111, 3412. That's going to be the nice area. Let me just bring this box here. So this is the box, and we are pretty close to this box. I'm not shorting the Dow Jones. I would just see the Dow Jones and the symmetry between all these three indexes, S&P, Dow Jones, and Nasdaq, to see if we can see another probably lower high compared to December high. And that's going to be very, very nice opportunity for shorting the market. So which one I'm going to take the short? I'm going to take the short in Nasdaq, just because Nasdaq has better beta. It's almost a triple than Dow Jones and S&P, and also the movement for the Dow Jones is very, very sharper and steeper compared to the other ones. So just be careful on that one if you want to just a short, or if you want to long the market. I would recommend go with Dow Jones. Still, Dow Jones is the better one compared to Nasdaq or compared to S&P. So just waiting for this area to get the close to the Dow Jones. Stochastic wise, momentum index is giving me a shorting signal. We are in overbought condition, and MACD is just a nibble bit to the overbought condition. RSI doesn't have enough momentum even. So all in all, this gives me, like, this price action is going to be a corrective rally. It doesn't have a good solid momentum to the upside. Even if you want to go to hourly chart, so hourly chart, as you see here, the same thing. So we are getting to this supply area. We are coming back, nicely testing this area, this demand area, going back up. So this is going to be ABC pop, and this leg, this upside leg, is getting into too much resistance here. So there is a supply area, there is a resistance area. Here we have like a very, very nice supply area, even 34,400. So which I don't indicate, but I'm going to show it here. All in all, if we want to see all of these resistance and supply area is break into the upside, we should see a very, very fundamental, a strong fundamental news, which is a CPI 4%, 5%. Then it's going to move the market all the way to the upside, and probably 5%, 10% even you can see one day. So again, tomorrow is very, very, very important for the market. We cannot see a doji or something like that. It is very, very low probability. And I'm expecting a sharp move to the upside or sharp move to the downside. So that's why even if you want to just take a trade, be careful. Be careful with your position sizing, and sometimes it's better just to stay on the side and don't take any trade, just because it's going to be very, very volatile market, and we are not gambling. We are traders. We are not gamblers. All right. So that's all about it today. It's coming a very, very comprehensive. I would say it's kind of 5 minutes above my average, which is 10 minutes video. But before CPI, I believe it would be better to have like more explanation than less. Have a great one. See you on the chart. Bye bye.